All right, good day to everyone, wherever you are watching us from. Today, I want us to look at the methods of depreciation, probably the two basic ones that we've been using in our studies, and how to compute the depreciation under these methods. So, methods of depreciation. So, for the purpose of our study, we are going to concentrate on the two main methods of depreciation. One is the cost method. In some jurisdictions, they will say straight line method, SLM, straight line method. And the second one is a reducing balance method. This is straight line. The first one is straight line method. Good. So these are the two basic methods of depreciating a non-current asset. It is so simple. If you are being asked in exams to depreciate an asset based on straight line method or on cost, they want you to what? Apply the rate of depreciation straight on the cost of the item. So imagine in the trial balance, the cost of the asset was 50,000. So cost 50,000. And the accumulated depreciation or provision for depreciation, that is the previous year's depreciation that they've set aside. It's also known as accumulated depreciation. Is, let's say, 10,000. And they want you to compute for depreciation this year or current year. It's simple. With a straight line method, this is how you go about it. Let's say the rate of depreciation is 20%. So for you to compute depreciation under straight line method of depreciation, you just apply the rate of depreciation, that is 20 over 100, straight on the cost. The cost is 50,000, which will give us how much? 10,000. You see how we do for the straight line. Straight line, or is on cost. Just apply the rate of depreciation on the cost. Look at it. But if it comes under reducing balance method, which is also known as diminishing balance method, listen to the name, reducing balance method. Here, you can apply the rate of depreciation straight on the cost. It should be on the net book value. And how do you get your net book value? Net book value is equal to the cost of the asset minus accumulated depreciation or depreciation. So for you to apply or for you to compute for depreciation under the reducing balance method, you first of all have to go and deduct the previous year's depreciation, known as accumulated depreciation, from the cost before you can get the carry amount to apply the rate of depreciation on, minus 10,000, which will give us 40,000. So with the 40,000, so simple. What is the rate of depreciation? 20. So 20 over 100 times 40,000. This one will give us 8,000. So you see, with the reducing balance method, the depreciation amount or depreciable amount is 8,000, and under straight line method is 10,000. It's so simple. So straight line method, we use the rate straight, or we apply the rate straight on the cost. But with the reducing balance method, you have to deduct the previous year's depreciation from the cost of the asset before you can apply the rate of depreciation.